Okay, we made it to the next part where we start talking about travel expenses. And these are just so much fun because we do look at them. So, to be deductible, travel expenses must result from a documented business reason. Again, business reason could be anything that's related to the business. But we can include the following: meals. Now, the cost of meals is only 50% deductible. It's always the case. You can only take half of it because, again, they take half is for business and half is for your personal pleasure, which, of course, we need food to survive. That's why they do it. Now, there is certain cases where we can probably get into 100%, but we'll look into those later. Now, if an employer reimburses an employee for the cost of meals, usually that we have a little stipend or something going on, 50% limitation applies, i.e., employer can deduct only 50% of the expense. That's key. Okay? Other travel items that we can deduct: lodging, taxis, tips. Yes, you can deduct for leaving a tip. And laundry. There's others. So, these are just the prime examples. Mostly anything related to travel, as long as it's for business reasons, and we can determine that, then we shall be able to take it. So, what are the rules? Well, here's the rules towards it. Travel expense are only deductible just if we can make sure they are substantiated. I can't pronounce the word all of a sudden. Basically, are they justified? We can basically tell that it's business. We have the proof. They're sustained. There we go. They are not lavish or extravagant. We're not putting you up in the Ritz Hotel. We're just doing the regular basics. Again, simple. Don't go big. It's always the case there, because if you go big, IRS is going to be looking at it and go, something don't look right. So be humble. Taxpayer is away from his or her tax home overnight. When we do mean overnight, does not literally mean 24 hours. It is defined as the period of time longer than an ordinary workday, in which rest or relief from work is required. So it doesn't have to be 24 hours. It can be 16 hours. As long as, again, it is more than an ordinary workday. When we look at a tax home, again, this is defined as a taxpayer's principal place of business, and it is not necessarily the same location as his or her family residence. And this is true. Now, we've had it during tax season where we're staying at the tax office. Well, that is the tax home. That's our principal place of business. So, can't really take anything overnight with that. But mostly, again, hotels, cabins in the woods, where creepy things happen in the middle of nowhere with Muriel and Eustace Bags. Okay. Anyway, so expenses of temporary assignments, okay, are deductible if it is not practical to return home at the end of each day's work. So again, I'm stuck. I'm at a temporary assignment. So again, if I live in Houston, I had traveled to Austin temporarily. That's basically it. I mean, it's a temporary assignment in Austin, so I get to take the expenses. Long-term or indefinite assignments generally more than 1 year, may require reclassification of a new tax home for the taxpayer. So again, if I'm staying in a place for more than 1 year, IRS will probably consider that now my new tax home. So then I lose travel expenses. You have to be careful on things. Long term is never good. Alright. Deductibility is dependent on whether a trip is classified as business, pleasure, or a combination. This is why we always go business or pleasure. But if primarily business trip within the U.S., all travel costs are deductible to and from destination. Only business portions of the meals, lodging, local transport, and incidental expenses are deductible. Again, has to stay business. So yes, if it's primarily business, even if it's 80 or 20%, 80% and 20% pleasure, it's primary business. I get to travel all the plane tickets to and from the destination, taxi or Uber, depending which way you go. But I still can only deduct the business portion of any of those items. If something is for pleasure, I am not allowed to take. If it's a primary business trip outside the good old U.S., travel costs to and from destination are split between business and personal bases based on the number of days. Okay? So if I spend 3 days on business but 2 days going sightseeing, those 2 days are personal. I can only take the plane trip up to that's 5 days. So 60% right there would be able to be deductible. Took 3 is business, 2 is pleasure. Any business related expense incurred while at destination are deductible. Simple as that. Now, if primary pleasure trip within or outside the U.S., because we don't have to make a difference, travel costs to and from destination are not deductible. Sorry, I know you did some business stuff on the trip, but if it was mostly you seeing the Grand Canyon for 80% of the time, well, you just can't take those plane tickets. This is why we have to ask a lot of questions when we're dealing with travel. Now, any business related expense incurred while at destination are deductible. Okay? Again, following the rules like meals, so forth and so on. Oh, we got an example. We love the example. So with this example, we have Gretchen. And she is a sustainability director. And she travels from Idaho to New Mexico for a business trip and pays $380 for the airfare. The lodging and meal costs are $330 and $150 respectively for the business portion of the trip. Okay. While in New Mexico, she goes on a personal sightseeing tour of Turquoise Trail and spends $400 on car rental and lodging and $85 on meals. What amount may she deduct for business travel? Okay. So, looks like we're all on a business trip, and it's probably going to be a little bit of mostly a business trip. So, what do you think? Pause, try to figure it out. Okay. So, first off, the airfare, since this is a primary trip and it's within the U.S., from Idaho to New Mexico. So, we get to take the airfare. So, that's $380. Now, that means we also look at the business portion of the trip. So $330 for lodging is deductible. But the meals, always watch out on meals. 50%, which is $75. That's what we get to deduct. So basically 380 plus 330 plus 75 equals $785. Anything that's personal, when we know it's a personal sightseeing tour, it's not deductible. So, yay, she spent $400 for that car rental and lodging and $85 on meals. Good for her. We can't take it. So, that's something, again, like I said, we ask a lot of questions about travel. We want to make sure nothing personal is being done. So, with that key, no deductions for travel expenses allowed unless they are able to keep proper records. So again, QuickBooks, receipts, usually travel log, those are all there. Taxpayers must sustain the following, or basically prove the following amount of each separate expenditure, such as airfare and lodging, dates of departure and return for each trip, and number of business days on the trip, name of city or town of travel destination, and the business reason for the travel. You must have all those. You must keep track. This is why some accountants get paid the big bucks, especially if their boss is traveling a lot. Even if we're self-employed, which basically this is what that chapter is, we need to keep proper records. Okay? Again, if an accountant's going to look at it and go, hey, we need to basically look at your travel. Doesn't seem good. May want to make sure you got the log going. Always have the travel log. Helps out so much. Alright, how about per diem way? Alright, so when we look at per diem, remember this is basically us getting money for our meals and stuff. But as an alternative to reporting actual expenses, employers who reimburse employees for travel expenses may choose a per diem method of sustaining. So, per diem actually helps us basically get rid of a lot of the records. We don't need it. We already told you this is how much you're going to get and this is what it's for. And a lot of times employers like to just reimburse employees. So employers can use per diem for all travel expenses or for only meals and incidentals. That's only up to them. Self-employed taxpayers may only use per diem for meals and incidentals. Okay? So for self-employed, only meals and incidentals. So, 2 per diem methods to sustain travel expense. One is the basic standard federal rate method. And this is where the employee is allowed a per diem amount for travel equal to current federal per diem rates, which again varies based on the travel location. Per diem amounts for each area of the U.S. is available at this website. It's a nice, welcoming website. Let's see if we click on it. There we go. The GSA, the U.S. General Service Administration, and here's travel. So it will actually tell us through all this what we get. And you can go through it, you can play with it. There's the regulations, travel policy, reporting. There's the per diem and per diem rates. Let's just go Texas. Find rates. And this is for everything in Texas. And this is the rates per month. So, standard rate, $96. But if we decide to go to any of these, it can raise or lower depending on where we're going. Fun, fun, fun. All. Okay. Back to the PowerPoint. Alright. So we have the standard rate. Or we can use the good old high-low method. Okay. High-low method is an easier to use if employees travel very extensively. So, basically it provides a simple way of computing federal per diem rate for traveling within the U.S. And this is really a small number of locations are designated as high-cost locales, basically $297 per day, and other locations are low-cost areas, $200 per day. As we saw on the website, it varies depending on where we're going. Once this method is chosen by the employer or for an employee, it's used most continually throughout the calendar year. We can't change it up. As you saw with the federal basis, that basis had a different one per month. Alright, so this has been exciting with our travel expenses, but this actually concludes this part. We can now move on to the next part of chapter 3. So, fun information. Again, remember, meals, 50%. We have to determine what's business and what's for pleasure. I will see y'all next time.